In this video, we'll discuss how to use price action, the candles on the chart, to help us understand where the market is going to go and where is the right place on the chart to enter. So the structure of the market right now is in a bullish trend. We have a series of higher highs and higher lows. If I'm going to connect the lows, I have a nice trend line working high. I'm going to copy it, put it at the top. Here we are breaking the uptrend, but it doesn't mean I'm thinking about bearish reversal. No, because according to trend line rule, we still expect for prices to test the new extreme after a break. And in fact, market moves in pairs of twos, and we have one leg down, break, second leg down. So as you can see, I'm also following the short-term trend line rule, break, new extreme. This is allowing me to predict when the bearish correction played out, and the push above EMA is indicating, okay, the buyers are back in the market and they want to see the new high tested. So right now the market is opening. I'm going to be a little bit careful. Prices went a little bit sideways and we have a new low. First attempt to sell, pull back, second attempt to sell, failure. This right here is a failed second entry short. Prices are still above EMA. EMA is acting as a support. Two legs down, we need to get new high. There is a nice tail at the bottom, which means this is a buying pressure towards the close, and this is decent high probability setup. It is a little bit close to the open. It's like 1 or 2 minutes after open, so it is safer, but would have been better had it been a little bit later. But still decent for second entry short, and this is first gate high probability setup because the context is so clear. There is no bearish reason to expect price to go lower. We just need to get the new high. Okay, remember we still need to reach the new extreme, so prices are still about to get the new high, so I'm not changing my analysis. I still expect new high. And this is interesting. We have a new high, first entry long, pull back, second entry long. Of course, I cannot go long above bearish bar. That is not touching EMA. That is not a good bar for me to go long above. And shortly after, we have tick lower, reversal up, and this is visual, two-legged pullback. Once again, market moves in pairs of twos, two legs down, and this is mini failed second entry short. So another great setup. EMA keeps holding, brought two legs down, great single bar, great momentum, uptrend is new high, and this is what you want to see. Great to have about these setups straight after market open. You need to get new high and perfect price action. So great setups breaking new high. So at this point, I'm going to pause looking to go long. Why? Because uptrend played out with the break in new extreme, so we can have some correction or reversal. So let's see what's going to happen. Prices are breaking low. At this point, I was drawing my channel a little bit wider like this, expecting downtrend to kick in. But we quickly broke above EMA and we retraced the entire push down. So now I have to adapt. Okay, this bullish momentum is too strong. So there was tighter downtrend with the break and the new extreme. And you don't have to be fully perfect. You can see you can easily adapt and rejoin in hindsight. So you're no longer expecting new extreme. I'm not going to argue with the market. Since this retracement is so steep, there was probably tighter channel. I'm going to redraw a brand new uptrend working higher. And now I can see EMA flattening. I can see spike up, spike down, spike up, spike down, spike up. So my next step is trying to predict some possible consolidation, because right now the bias is a little bit unclear. Let's see what's going to happen. We have another failed second entry short, but problem is not only the uptrend has a breaking new high, but this failed second entry short is lower than the high low, which this is not something we want to see. Remember, we want to see like first entry short, second entry short failure. Part of one move. This is a lower. So not the best setup. I don't think I can go long here, especially once we have breaking new high for this uptrend. So I can be careful. And now it's getting a little bit confusing because prices are a little bit too bullish for me to sell. We traded up into this, but at the same time I cannot go long. Now there ended up still being a decent lower high back into this trend range. Problem is we traded up into this. Now this was by no means a strong uptrend working higher. This is pretty much a lackluster uptrend. So the trend range is taking over. But, you know, you trade up with some slight bullish bias. Not the greatest setup. You know, I can market more aggressive because you're confirming the failed breakout. You expect prices to go lower. All uptrends played out. I'm going to redraw the uptrend, the downtrend working lower. At this point, I'm not sure what is the bias, okay? It's too bullish, so I don't want to go short. But at the same time, all uptrends played out for me to go long. We have overshoot of this downtrend. EMA on this bar, so I have to be patient. This is area of indecision. I cannot go long, I cannot go short. I need to see either strong push phase trending higher above EMA or confirm downtrend working lower. So you can see it is just whipsawing flat EMA, so you have to be careful. You have to be careful. Prices keep basically going higher again, so very unclear. It's basically acting as a trend range. You have a new low first entry short, second entry short failure, but you can't really take it. It's below EMA, not a good bar. Let's see what's going to happen. Okay, spike down. I'm going to redraw the short-term downtrend. I'm going to widen my trend range a little bit. And now it is really starting to act as a trend range. This push down is significant and we expect new low to be tested for this downtrend. So there is break a new high here. And prices create break and new extreme. So we have break a new low. And this right here is a little failed breakout. The signal bar is a little bit weak, but it isn't a bad setup. I think I can mark it. If you're a more aggressive trader, you can consider, because we're so far from the EMA. The problem is the support is not confirmed at all. You can see you have support that is not confirmed. Where are the confirmations? So the trend range lows are not as confirmed, which is not ideal because you want to know where the key level is if you're trying to fade the key level. But it is a decent step to take a chance, no problem. If you took it just to ride it back to the EMA, it is worth taking a shot. This one ended up being a losing trade, but no problem. Now, since we are part of the trend range, there's a big chance we're going to go back into trend range. So for this reason, I have to draw wider uptrend. Remember, this is the first leg down, break, second stronger push down, and we have new extreme. So I cannot take the second entry short, simply because it is too early. We were in a trend range, I cannot take it, there can be breaking extreme, but I can see EMA rejecting. Why we are not breaking above the EMA, and now we have decent lower high. At this point, I'm starting to question myself, okay, it doesn't act as a trend range. Double rejection of the EMA, most likely because the second leg is so much bigger, there is a brand new downtrend starting on its own, something like this. And we're going to test the new low because it's no longer acting as a trend range. In fact, it's acting as a breakout pullback. So if you have better lower high on your chart, you can consider selling here. On my chart, this lower high, however, is an inside bar. So I can't really take it. And a failed second entry long triggered below bull bar. So I can't take that as well. Once again, only if you have better chart. But what I can do is definitely now I expect new low, okay? Because we are failing to break above the EMA, back into trend range, triple rejections of the EMA. We're about to test this leg down, okay? So I'm going to draw the congestion here. And what's going through my mind is a breakout pullback out of the congestion. Every single time you have congestion like this and you still expect new low, breakout pullback congestion like this, lower high, is a decent setup to consider. Okay, this is good. And now we have lower high breakout pullback. You cannot sell below bull bar. You have to use double bar entry. Once again, this is good that the low of the secondary bar is quite close to the low of the previous bar. So the risk is not that big, and it's a lower high breakout pullback. And this is a great high probability setup because the downtrend needs to be at new extreme. And you wait it because here you never know, there can be the one push higher, go back into trend range. It can be a little bit tricky. So you wait for the lower high either here or for the lower high breakout pullback. And this is the final confirmation. Okay, the sellers are back in the market. EMA keeps rejecting. This downtrend is about to get new extreme. So the context is too strong to not take it. And the double bar entry can be risked simply because the context is so good. Breaking new extreme. But notice bottom keeps dropping lower and lower. So once again, it doesn't look like the downtrend is done. Okay, a little bit more nuanced. But because EMA keeps rejecting, after breaking new extreme, push down, another push down, another push down, another push down, you can't even go above EMA. This is not happening when the downtrend truly is over. So I can look for additional spike in the channel as well, which right now has a small overshoot. So I have to redraw the short-term uptrend working higher. Okay. Now also what can help me is I can measure the one leg down. As a price action trader, use the measured move, the second leg down like this, and we reach the measured move. So we can combine the overshoot to expect stronger pullback, the measured move to expect stronger pullback, and you can also see if you're going to measure the trend range. I guarantee you it is very similar to acting as a two-tier trend range, but you don't really need it because you have the two legs down here. So we have second entry short, but we broke above EMA. It is still sort of like an inside bar, so I don't want to take it, especially after overshoot, especially after the measured move. This is a horrible signal bar. Why we pushed above EMA? I need lower high. Okay, I need to see a lower high. No lower high. No lower high. This is not even close to being double trap because double trap needs to close above, below EMA. So this is just hanging there. Can we get a lower high breakout pullback? I expect this now, lower high breakout pullback because we expect new low. Okay, and now I'm going to pause looking to sell because why we are struggling to break the new low? We're back above EMA. It is too bullish. And if you're going to take a look at 10,000 tick chart, you can see that this push up really resembles basically one leg working higher. It's really more visible on 10,000 tick chart. So I'm going to pause looking to sell. Clearly, the market is not confirming my analysis. You can see I cannot argue with the market. There was supposed to be breakout pullback if we're going to go and test the new low. It's not here. It's too bullish, too many high lows. So I have to be careful. Overshoot is kicking in. I'm not going to argue with the market. There's a lower high, but I can't take it. It doesn't look that great. And now, as you can see, we have a tiny break. Push to new extreme. It's very tiny though, so if you didn't catch it, it's not that big of a deal. You have a failed second entry long, but on my chart, the signal bar is bad. Visually, once again, higher time frame can help you. This looks like a broad to a gap pullback, so this is good. Because you can see there's some depletion of the bullish correction. And there's a still chance we're going to test the new low. You can see how market moves in pairs of twos. But this failed second entry long is simply ugly. You know, this lower high, looking back, it's not a bad setup at all. It's just a little bit more advanced. Because the bullish correction is a little bit stronger. But there are two legs. Small break new highs. Once again, more advanced trader can consider the bar is quite small, only 2.5 points. So no problem. Trading is about taking a risk. Failed second entry long horrible signal bar. And this is a little bit better because now we have this short-term downtrend working lower. That is confirmed. This lower high is sort of confirming the failed second entry long. It's below EMA, and we're most likely are going to test right now the new low for the downtrend. And this is actually quite a decent setup. Strong bearish pressure towards the close. Lower high confirming the failed second entry long. We're coming off the range highs, two legs up. So there's no reason to expect prices to go higher. Bottom dropped. Gonna redraw the downtrend working lower. When I was watching this today, I was actually, we're above EMA, so I cannot sell at all. I was actually watching a little bit wider channel, something like this, because it felt like it is a little bit more structured. But once we retraced so much to the upside, we have to adapt. So I'm going to delete this. You know, in hindsight, there's a failed second entry short, but problem is, not only there's a possibility for the wider downtrend, but why this short-term downtrend doesn't have a break in extreme. So I feel it's a little bit too early to pull the trigger here on this failed second entry short. But there will be reversal pattern, but this downtrend doesn't fully new extreme. And the reason why I want to respect this is because normally you don't expect the new low for the leg that is creating the push to new extreme. So let's say you have a downtrend, break, new extreme, because we could be drawing these channels indefinitely. But 90% of the time, the leg to new low is much smaller. It's much weaker. You can see this push to a new low is very strong. It gained momentum. It's in fact big as the trend here itself. So there's a really big chance we're going to test the new low again. So I got to be careful. But either way, now we retraced. So I have to adapt to this bullish bias. I'm going to redraw the short-term downtrend working lower. Break. Push to new extreme. We expect new high to be tested. Can I go long below EMA? Now we have high low, but it's not fully above EMA. EMA on these bars. It didn't push above EMA. It's getting congested. I can't take it. More congestion. Now you have failed second entry short, but you can see it's part of this congestion. Okay? You're trading the breakout out of the congestion. You can see how far up at the top of the move it is closing. It doesn't feel good. Okay? We never truly pushed above EMA and EMA acting as a support. This is part of congestion and most breakouts will fail. So price is most likely going to go back, EMA flat, so we can't take it. We got to be careful. I'm not touching it. This is horrible consolidation. 20 bars stacked. So what I'm going to extend my consolidation. We have a little failed breakout, but the single bar is horrendous. Had there been better bar, you can consider fading it. Why? Because you expect new high to be tested. But now that you finally have a failed breakout, prices free themselves out of the congestion. If there's going to be high low of EMA, it's going to be better. Because why is this different now? Well, because we broke out of the congestion already. You can see here the congestion is forming. We broke lower. Most breakouts will fail. So we got rid of the congestion to the left. And high low now would be actually decent. But there was no high low anyway. No tick lower. No percentage short. You get high low here, but it's so far up, so far from the EMA, I can't take it. We have a break in new high. But we have similar issue as we had for the downtrend. Why prices keep trending higher? You have a uptrend here, break new high, push up, push up, push up. So likely there is once again another tiny spike in a channel pattern like this. because it's simply not acting as a breaking new high. There is no correction, no reversal. It just keeps pushing higher. Now we have visual two-legged pullback, one leg down, break, second leg down. We can also consider this as another failed breakout. So this right here is a failed breakout, visual second entry long. We're most likely going to test the new high, but we broke below EMA. You have to use double bar entry. Now it is below EMA, but now that I'm looking at it, failed breakouts, they're going to be okay below EMA because it's just the nature of failed breakouts. But just a single bar is bad. You have to use double bar entry, and your stop has to go all the way down here. Your entry point is somewhere around here. It would be much better to get high-low. I'm going to mark it just from the educational perspective, because if you're a better bar, it's much better. Two legs down and a failed breakout, and you expect new high, you trade up into this. But high-low would be better under this scenario. Prices keep pushing higher and keep pushing higher. Okay, there has to be a bigger channel, so I'm going to connect these swings. I get third swing confirmation, because there clearly has to be a bigger channel. Simply the uptrend is too strong. Can we get a second entry long? Yes, new high, first entry long, second entry long, but doji below EMA, not good. I want to see high low above EMA. No high low, new high, first entry long, pullback. Here's the pullback, second entry long, but it's too big, too late, but it ended up working like a charm, and market is about to close. So this is the overall structure for today. Very good price action. Quite a few setups, great setups to start the day with. Then we have to be a little bit patient throughout this consolidation. Great lower high breakout pullback, decent lower high here. A lot of great setups context wise on the way up. Fell breakout here, another fell breakout to like a pullback, two second entries. So great setup context wise. You still want to study them and understand how the trend is developing, why it is a good setup to consider. Because next time you're gonna watch this same scenario, because price action patterns repeat over and over again, you're gonna be able to take the setup because you're gonna be equipped with the right knowledge. So you still want to go back, study this after the fact. That's how you get better. You don't just get better by trading live every day. You need to go back and study, learn from your mistakes, and learn from what you did good. But great setups here, a lot of second entries, but they're just not easy to enter, especially this late. When it's this late, you don't want to be taking unnecessary risk. So great uptrend, but I'm gonna wrap it up. I hope you had a good trading day, and I'm going to talk to you next time. Good luck in your trading.